YouTube one should now be running. Morning, Marius. Marius, mic test. I am still playing with this mic, so I've moved it a little bit further away. I hope it's not too boomy. If it's too boomy, I'll bring it back closer. And good morning, everybody. Welcome to Wednesday, the 11th of October. Yep, another market moving day coming up, I think. We've got some major news and we'll get to that. That's the PPI. We'll get to that when we do a quick rundown on context and prep. October the 11th is my youngest daughter's birthday, so I've been doing what professional traders do not do, which is spend about 2.5 hours building a multi-layer or baking a multi-layer birthday cake today. So that's something different that I do not normally do. Anyway, I hope you're having a good week so far. Let us do the disclaimer. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, with that said, let us go to the charts. And by the way, I am testing out appearing, so I'm here. You can see me. I'm slightly transparent against Bookmap, but I am here, and just sometimes it's good to see me look you into the eyes when I actually say something, so you can work out for yourselves whether you think it's worthy of belief or not. As always, I'm not here to sell anything. I'm just here to provide some analysis and to provide some information or education or edutainment as we go along. Let us go to the slides and we will do just a recap again. We're doing this structure. So for the first bit, we're going to do the prep context. Before the 8:30 PPI release, I'm going to try and squeeze in some education ideas for about 15-20 minutes if I can. Okay, so yeah, having a look at the economic calendar going forward into today. Obviously, the main one is the PPI and the core PPI. I've included in the screenshot today just the expected numbers in case when I have the financial juice audio feed on at 8:29:50 or whenever I turn it on, you hear those numbers so you can see them against that. So in other words, the core PPI is expected at 0.2 and so is the PPI. Okay, obviously this week we have had a bit of a turnaround. We've got some excuses or rationale or reasons that are given in hindsight. I think two of the main themes that have come out are that the Fed is looking to be softer on interest rates going forward, and also China is talking about a new stimulus. So yeah, those are the reasons, but as you can see, there's been a bounce. I've taken off the multi-month uptrend line that was clearly broken. I may put it back on in due course, and I put on a downtrend line for the time being to see whether that stays intact if we do get up there, and note that the 50-day moving average is close to that downtrend line. So again, it would be no great surprise if we kept ramping towards it. And the same with the NQ, we're probably at that 50 already, I haven't checked. This week, and I've put the entire week's movement for the stock heat map, so you can just see the big boys over here, the Microsofts, Googles, Apples. Even though it may not be reflected in yesterday's one-day rate of increase over the whole week, they're all up massively, and Amazon too, which is a good turnaround for it because it was down towards the end of last week. In fact, it was the weakest of the big 5, 6, 7. So yeah, all the ones that have been driving the market upwards this year are all up significantly. Okay, and the 15-minute chart, and again, the purpose of this, as I keep saying, is to see where we are in ETH vis-a-vis yesterday's range. So we've got yesterday's Globex high, low, and the daily high and the daily low. Where you can't see the yesterday's daily high, that's because it's the same as the Globex high. In other words, that is superimposed on top of it. And so we've basically not gone under yesterday's mid. Well, we've gone under it a tiny bit, but we've stayed in the top half of the range. And with NQ, yeah, again, we stayed in the top half of the range. And yeah, they probably got yesterday's Globex high within their sights. So that's one thing to bear in mind coming into that 8:30 news. Okay, with the two TPOs, and I can always drag in the charts. The only thing I've done differently here is to actually highlight what I often highlight, which is going into the ETH session. I take the last value distribution, or the last normal distribution, i.e. where there was significant traded value, and highlighted it with a lilac or light purple rectangle, just as a guide to see whether it's one of those days that ETH just stays in the range or we're breaking out. And you can see there on ES that it is breaking out and is forming value above that, above the last value of RTH. So that's the afternoon. If I split that up, and I can't split up a screenshot, obviously. If I split that up, you'd see that was the last afternoon value, just that area there. So it's interesting to note that we have got a nice fat or poor high in ETH, and maybe they'll push that a little bit higher with that news. Again, we cannot predict the future. We do not know what is going to happen with 100% certainty. There's just a probability above 50% that that is not going to be the high for the ETH. That's just one of those things, but we'll have a look over at the Bookmap liquidity map and see what there is above it should they wish to go any higher. Okay, let's get the stream back on. So let's do what we normally do in ES in the heat map, which is to zoom out vertically and have a look at what's above and below, and paying more attention to the actual numbers in the order book column than we do to the orange or red in the heat map colouring. Remember, the heat map colouring is automatic, whereas the numbers are objective and they are real. Okay, so in other words, these colours are going to change depending on whether I zoom in or out. And you can have an orange level which may be 135 today, and yesterday it may have been 335 with exactly the same shade of colouring. It's just worth remembering whenever you are looking at those colours to bear that in mind. Okay, so in other words, we've got some liquidity above and below. So below you've got this 168 at 4385. Numbers are even small for me. Maybe I'll get my reading glasses on. And up above you've got 442650. You've got 200 or so, 4426 probably, just around about there. And if you look over at the 3-minute chart and just zoom out NQ, you can see that, as far as ES is concerned, if the grey shaded is the 1SD of VWAP, which is a proxy for value today, which applies equally in ETH and RTH. It's the whole session since 1800 hours New York time. We have basically held above that value. So if I'm saying that the dark grey shaded is value, we are above that value and we've stayed above it. If you scroll back to yesterday, was it yesterday or if you look at any trend day or any trend session in ETH or RTH, you'll often find that when they do break out of value, a really, really strong trend will maintain that breakout of value. In other words, it will hold in these lighter shaded areas for a long time, for the entirety of the trend once it gets going. So it's just that is the only reason I've got it there. It's not to take a trade when we dip back to value. It may on this occasion have been a good place, but there could be lots of reasons why that would have been a good trade, and we can look back at the London Open. In fact, let's do that in these charts. Okay. I think if there's one thing that should be obvious around about London, London is 3 o'clock, both here and there. Maybe I'll get out the pen. Let's get out the pen. So yeah, I do use a pen and a tablet, like I say. Now you can actually see me hold it. So if we have this being the reversal point, both for ES and NQ, one thing I just want to point out, and this is again something that I pointed out several times, maybe it's many times now, that they do love to come and tag settlement. And the magenta or pink line, which is this one here or this one here, is settlement. And in TradingView, that's actually accurate now. It didn't used to be accurate, but that is accurate. And why do you have both of these charts here together? It's because it may tag the settlement in one and have a big reversal, and it may not quite get to the settlement in the other. So that is something else that is quite common. So you'll say, oh my God, NQ didn't quite get down there. And, that's why we need to look at them both in tandem. We can't say with any conviction that one is always driving in ETH over the other. It could be ES today, it could be NQ tomorrow, but it's nice to know that they're both approaching settlement and they both had a big reversal off it. So in other words, if you're looking at the supply-demand type trades for here, you've got, on the 3 minutes, you've got a spring just there, and you've got another spring just there, which if we did go back to Bookmap, that would probably be a lot easier to see. In fact, let's try and do that. So let's get on the cursor and try and do that. I'm just conscious of time again. That's probably why I am speaking so quickly. And let me just check everything is okay on YouTube. As I always say, feel free to post any questions or comments either in the Discord channel or in the YouTube comments, so I can see them. I've got them on my screen, so if you see me look up there, I'm looking up at the YouTube comments, but there aren't any. But I'm just seeing how many people are there and whether they are having any issues, like I saw the other day where I did not have this screen turned on, so maybe you could actually see it. So I am just looking at So what's interesting is that they had this liquidity, and maybe the easiest thing to see in this one was this spring here. So if we get the pen back and running, it's not quite as perfect as my favorite, which is where you have a spring right into heavy liquidity. That isn't the scenario there. It is a good spring. It's right at a key level, which is settlement, and then we have a strong bounce off. I'm assuming I'm looking at the right one. I may not be. No, it's 4:30. I'm looking at the wrong one, so excuse me, and let us just get rid of those and go to the correct 4:31. Sorry about that. 4:30. Yeah, so they came back to settlement. If we zoom back in, it's also a test of that stop run, the 97 MBO stop that they had in the German open hour. And the German open hour I'm talking about is essentially 1:50 a.m. New York time to 3 a.m. or 2:55 a.m. New York time. Basically from about 2:55 onwards, it's really the London Open. So they come back down and they test it, and away they go. And since then, we've essentially been driving up to the liquidity above. So if you zoom back in on seeing how the liquidity picture was there, and then they begin to increase that liquidity and we begin to grind through and eat through it. A pause for this iceberg, and then we're just hovering around there. But basically a grind up afternoon session, or afternoon for me, morning or early morning for you. Time check, 8:13. Okay, I will stop rattling on now, and I want to move on to the next session. So basically we're at the upper end of our range. It's been bullish all week since these two turnaround events, and that's the scenario we're going into PPI. Okay, right, let's move on and do something different and completely different again. All right, I'm going to refer you to some of the webinars that my colleague Tom has given. Tom's often used the word casino, and just to really get into your heads that you are playing in a casino. And what have I got up here? I've got a very, very basic Excel spreadsheet. And what have I created? I think it took me about 10-15 minutes to do this, and this is simply an expectancy calculator. Right, what do I mean by that? I mean that this is a way of profiling the types of trades that you have and seeing whether you are going to make money in the long run doing what you're doing. And you can start modeling it here, because the real purpose of this is to model the types of trading behavior you're likely to encounter in your own performance, and then to plug in some real numbers and see how they compare to what you modeled, and see whether your outcomes change going forward. But the idea first and foremost is that this is casino mathematics, and it's also all about psychology. And there is a reason why I use that word psychology in this. And let's start drawing again. Okay. All right, where's the pen? Okay. There's one thing that isn't on there. I'm going to put in a cell just now. If you go on Twitter, if you go on YouTube, and if you go on lots and lots of these courses, or where these amazing traders teach you everything from A to Z, etc., and guarantee you're going to make $1 zillion trading. A lot of that has this in common. It has that two-word phrase in common: win rate. And you'll see a lot of this, 70% towards 95%. I'm sorry if my 5 is a bit terrible there. And they will focus you solely or predominantly on the win rate, right? What I want to do with this spreadsheet in the 10 minutes that we've got is to get you away from that. But because a lot of people have also come across the win rate, and it is important to them, let's build in a win rate cell into this one. So down here at the bottom, let me see if it's going to behave. Yep, it is going to behave. Let's put a win rate. And let us make that one a completely different color. So we'll make it green. Okay. And for this purposes, it's a very simple calculation. It is 100 minus in fact, sorry, I was just thinking, I'll have to correct this in a while, and I'll explain why I've got to correct it. It's basically because I've got a row number 16, and this isn't going to, it's not going to cater for that one, so I'm just going to do that. Whoops, a daisy, sorry. Apologies when you're doing these things live. And when you're typing live, it can be painful, so bear with me. Okay, all right, let's start from absolute scratch with this. And again, I've got to do another time check, 8:17, so we've got 10 minutes. We will get back onto the heat map before the release of that news. Okay, I've removed commission for this purpose, so that when we start looking at this, this is a coin toss. So we're essentially saying you've got a risk multiple. You're going to lose 1 times 50% of the time, and you're going to win 1 times 50% of the time. That is the most basic version of an expectancy calculator you can get. From there, we're going to change it all up a bit, and I'll add in the commission. And you saw me put in 8 there, and the reason I did that was to, for this purpose, let's keep it very simple. $8 is roughly the round turn commission for 2 ES contracts. So that's exchange fees, broker commission, etc. So we'll put $8 back in there in a second, but you can model that to be whatever you want to be, and you can recreate this calculator yourself very quickly. And the reason why I'm not giving it out is because it is too basic, and because if you do the work, you'll see why it focuses your head on the right kind of mathematics and not on this number here. And let me make this one a shade of green as well. But why green? Because people love looking at that one. So we're gonna do that. Okay. So what I'm saying is that a lot of the time you're gonna sorry, I can't do that. You're going to get people coming across and saying they have a trade set up, a strategy that has a 90% win rate, right? Okay. I'd like to say it may be true that they have a 90% win rate, but what that will do is that will mean that your 90% there is actually not 90% 1R, but it's actually more focused on this range here. So if I get my pen out and draw it, let me draw it. So the more you focus on the win rate, my assertion or statement or hypothesis is the more you'll find that your trades are closer to zero. They may be positive, but they're probably in this range, in the 0 to 0.5. Sorry, that pen is, I'll just do it with the mouse for a second. Yeah, so I'm just saying that the more you focus on that 90%, the more you will end up finding that you're taking trades where you've basically made a tick or two, and your actual multiple, which is the multiple of the amount that you've risked on the trade, is closer to 0 than it is to a factor of 1, 2, 3, 4, 5, 10, whatever, right? And I'm also saying that I mean, this is first-hand experience, and I'll just tell it as it is, rather than say that you can make zillions and zillions with one order flow setup. And also that the other factor is that the more you focus on that win rate, the more that you're likely to let your stop run. So at the moment, I'll change color here. Your stop this is something that I've been talking about, that you're basically taking the same loss with every single trade. And I'm doing it in dollar value. So say, for example, this is $250. I'm just saying that the modeling that I do is that with every single loss I have, it's going to be likely to be that $250. It's not going to be exact. I mean, I built myself some code. So if I was doing it with a risk of 250, it would not exceed that unless the stop that I'd set got run through because it was such a thin instrument. Trump had released a tweet or whatever, and you got you had slippage of about 5 points. But essentially, the way I've modelled my entry mechanism is that the 1R is the max that I will take. So quite often that 250 will in practical reality be 240, 245, 230, 220 even. It was the best way of doing it to ensure that the 250 was not breached. Okay. So the other thing that I'm saying is that not only will you end up having lots and lots of trades in this 0 to 0.5 column, but you will also have outlier stops. In other words, an outlier stop is an instance where you have let your stop run. So rather than, you may, with all the good intentions in the world, have set your stop at -1R, but you move it, you widen it, and then you keep widening it because you are too focused on winning this individual trade. Maybe because of your overall win rate that you're trying to retain, or maybe because you cannot accept losing, because you haven't done the mathematics on how your business model actually makes more money if you do accept quite a few losses. So I'm just saying that that outlier stop may not be a multiple of -8. It might be a multiple of -20 or -30. You might blow your entire account on that one trade, because it does happen, because you didn't accept your stop and you refuse to believe that the market cannot keep going in the opposite direction. And remember, the market is not a rational being. It will do whatever it wants to do. It's an auction. If it finds traction in the other direction, it will keep auctioning until it stops, until there is no longer any interest to keep going in that direction. I'm just saying. All right. Sorry. There was just a comment in the YouTube. That's fine. I'm also going to do a time check. I can actually come back to this at about 8:45, 8:50 after the news, because I don't think I'm going to finish it in the next 4 minutes, because we're not really going to do all the modelling. So let me just ditch all of that and go back to the cursor. Right. Okay. Right, so we started with 50-50, right? What I'm suggesting is that you leave, let's just leave this number, leave this one as a nice, leave it as a nice pink colour, salmon colour. Okay, you take your focus away from this number. So and you leave the likelihood that it's going to be in the 50% range. Maybe it'll get down to 45. By the way, this is 100 trades for the purpose of making everything a percentage. That's the only reason I chose that. It's also well above 20. If you look at all the various books on statistics, nothing is really statistically accepted unless you get to at least 20. So I still think 20 trades is too little to do a casino-based model. But yeah, so what I'm suggesting is that you take your focus off that, and you try as well to take your focus off breaking even this one and this one, and you accept that that most of your trades may be around about the 1R. Maybe they're around about 35% of them are at the 1R, but you've let a few run, right? So let's just take an example now that we've let 15% run, and that they on average have got to the 3R. And then we stop and we have a look at what that does to the model. All right. I didn't actually do a screenshot or snapshot of what I had about 2 minutes ago in terms of the profit factor or the expectancy per trade there. But what I just want to do there and to show, and again, this is a very, very basic spreadsheet, and if you look in every single one of the cells, if you look up in that cell, you can see the calculation that I've done. I mean, if that cell there, from that cell and from zooming in on the screen there, you can build this entire spreadsheet yourself in 10 minutes. It really is as basic as it comes, right? But what you should be able to see immediately, and maybe let's just write that down there. So we've got an expectancy of $75 per trade, and a profit factor of 30%, and a win rate of 50%. All right. And if we then just go back to this, let's do a more realistic one where we are focused on this 90%, and I think this is the last thing I'm going to get to here. So I'm going to say that 25% of them are 0.5 and 25, 60 are 1 and 5 are that, and 0 on that. Right, so now we've got our 90% win rate. We've got a profit factor. We've got an insane profit factor. Let us come back to that anyway, because I don't think I've quite proven my point with those numbers. I may have got them wrong in that column, but let's get across to the heat map and focus on what's about to happen as well. I can turn on the financial juice feed, if it's not too annoying. Let's have a quick look at NQ as well. NQ, we've still got these dreadful algo bands. We've got some liquidity which is not part of that algo band. They're just pressing it down from 15,333. And we've got this resting liquidity that's been there basically around the round number, but a fraction higher than it, which is the unusual thing, but they've moved that, so it's not truly resting.
Middle East says expansion of the conflict zone may lead to serious consequences, including in energy.
Okay, if that newsfeed gets too loud, I will shut it off, but the idea is to leave it on for the next 2 minutes as we go into this news. So we're very bullish. We wouldn't be surprised if we have one more pop up, and then see where we go. So they flagged there, they increased liquidity there, and they flagged it. I think they're just trying to draw people's attention down to the 4385 level, the 4385 level. We'll zoom right out again, and we'll zoom all the way back in and see what's really been there. So this has really been there all day, this 4385 level, and that's what they just highlighted again. So that's worth noting as we get in, and they've also added some liquidity down at the 4370. So one thing that they're flagging, which may not be a big surprise, if we have a little pop up, we then go down. But let's have a look. 829. So all liquidity you can just see has been removed. Let's zoom right in. They've left the 43870, but most of the rest have been taken. They've got a small iceberg that they're gathering. But let's not read too much into the iceberg going into news. It is 30 seconds and counting down, that is. So all the liquidity has basically been ditched. Yeah, so this one's quite an interesting one. Again, I would not be surprised if we don't end up going down, just based on what they're flagging, but a little pop-up first would be nice. And down it is.
2%, 2.2% higher than forecast, 1.6%, month over month at 0.5%, 0.5% higher than forecast, 0.3%. Year over year at core 2.7%, 2.7% higher than forecast, 2.3%. Core month over month at 0.3%, 0.3% higher than forecast, 0.2%. Look into the month.
Okay, so I've turned off the news feed, so just basically so that the PPI was higher than forecast. And at this point, we can scrap the news. All we are concerned about is the market's reaction to that news. Was it a huge spike which showed that it was well off expectations? And I'm not talking about expectations in the calendar, I'm talking about their real expectations. And we also know that we've got a scene of the crime just around about here on ES at 4403, so has not revisited that scene of the crime yet. And it's looking pretty weak. It's been nice if you did want to short to get back to that scene of the crime. Just having a look also on the volume at the extreme at 16, so that is very much, it may not fall within the technical definition of what rollover is, but there is no real definition. So it's I just mean that there's a low volume on the extreme, so there is no overwhelming probability that they want to continue. In other words, it's not a poor low yet. I always use the word yet because we cannot predict the future. So we're just going to watch this for a little while, and we'll just flick over to NQ. So it had a big drop. And again, it's also having a little bit of a retrace, and you've got some liquidity which is staring everybody in the face at 15,272. So it'll be interesting if it goes up first, will it come back and go down towards that? So ES is trying to get back to that scene of the crime, and again, I think the scene of the crime is really about 4403.75, so we're coming right to it. And let us see what is hitting the deck now. I'm on Bookmap. So we've got 52 at the high, and we've got some nice liquidity up here. So the scene of the crime really is around about there. So what we're trying to see here is, was that just a fake spike down and we're now going to keep going with this big up move we've had all week, or whether we are really going to start getting back into value from earlier in the week. And if I drag across, see if I can, I'm just dragging across the value for ES. You can see, that's what I drew beforehand. We're really smack bang in the middle of this, so there's nothing overly directional if you look at where we are here, which has basically formed a value in that sort of area. Yeah, sorry, I've stopped talking because I'm just watching. And again, I'm just zooming in because I want to see whether they are still hitting this level up above, and I also want to zoom in because I want to see the microstructure, i.e. we're now in this bouncing zone from 4402.50 down to this little swing low at basically the round number 4,400. So we're bouncing there. Are we going to continue up and get back to the scene of the crime, or are we going to fall out of this bounce and then head towards that liquidity below, which is where they advertised that they wanted us to get to, if we can trust that resting liquidity magnetism today. And again, nothing's 100%, it's just an idea. Yeah, so really it's not the it's not quite like the NFP action that we saw the other day, which was quite memorable. We're now really back to the more of the slow, grindy movement. Yeah, often with these scenes of the crime, they'll get close, but they won't quite get right to the level. I thought they would here because they put two areas of liquidity there. In which case, this might be the reverse spring that's setting up. And then you start to use the delta column and see whether that's going to be nice. Here we go, getting right back into it. The first liquidity has now been taken. They're going to get to the second one. And this essentially is the scene of the crime, the second one, or within one tick of it. Now, will this hold? No, it didn't. So are we just going to continue the auction that we had earlier? So I'm zooming out to see whether we are going to have this kind of spring action on this swing high here, which is at 44075, or whether they're now going to grind up towards the 4410. Certainly looks like the buyers are in control here at the moment. This is exploring, and you can see that was bouncing. This is clearly exploring. So whenever you have something that looks like exploring, you look at these tiny little swing lows and see, certainly on NQ it's easier. You see, can they get below them again? Can they get them below them easily, or is every push down back towards them incredibly painful for them, and then it spikes up quickly in a fraction of a second? With NQ especially, you'll find that you'll see that often, that they just do not want to come down and take out any of these micro swing lows during an exploration up, and that's the time where you just don't want to fade them. You don't want to go short because it can keep going a very, very long way. Okay, let's have a look at what hit the top this time. 54. Right. Okay, so that is some movement. So you can see that vertical move down there. So this one went to the scene of the crime and further, but that was quite interesting because it took out a few price levels instantly, and it was a nice stop run as well. And you can see also with this absorption indicator that there was a large trade there. So that's essentially giving us an approximation for that being a 233 trade. I can also see on my Sierra stuff, you don't normally see this with me because you don't normally see me look at my other screens, but at this point when I see something like that, I'm often looking at some of the other things that I have just to work out what it was that was up there, and do we have a potential for a short coming up or not. So that's why I was having a quick look at my other stuff. Now I'm going to zoom out and have a look at the liquidity below and note where we were on that swing low. So we were in the order of the 4395s. They're trying to build you can see that they're putting some pressure on in the book here, plenty of liquidity. They started with the sell iceberg, and what you really want to see is some continuation and then a plunge down towards that 90. This is a fight. So when it's a fight, we look for some clarity on the other instrument. Again, I normally have these side by side. I find it a lot harder to assess when I haven't got the two symbols that work in tandem side by side. So you've got this block of liquidity acting as pressure and also acting as a wall, and they're adding to it. Remember, we had some levels, especially this 4385 level, which I can't really see that well anymore because it turned out to be real, but you've got this one down here at 4370. Again, it may be something that comes into play in the RTH rather than the ETH. But at the moment you've got this acting as a wall. and they've suddenly added, you saw that little algo blip there. You can zoom in and see what they actually did there. Thought I saw 600, yeah, there was 600 there. So it was a little flash. It's one of those things you can see in Bookmap that you can't see in other software, to my knowledge. You know, when they have that kind of algo advertising flash there, you know, they waved a red flag of 600 contracts in the air and said, come find me. Right, I'm just going to do a time check, 8:40. So we've got 20 minutes. I do want to go back to the expectancy calculator. Yeah, so far you know, if I was looking for a trade until the RTH open, I'm looking more on the short side. Just this pressure here that, you know, they're trying hard, but these things don't go in a straight line, and they may need to go back up and get some more fuel before they can go down. NQ is indeed going up, and they've advertised that liquidity down there. That's a big number in NQ. It's not real. Well, at least I do not think that it's real, and then it disappeared right in front of our eyes. There was 200 there, and now there's 24, so it wasn't real. It's interesting watching these games. At the same time they did that 200 game in NQ, I missed this 500 trade in ES. Again, you saw me look across. Okay, so what I want to do now is have a look to see what is at the bottom of that. I was seeing whether they were both buys at that level, because that would be very, very interesting to me, but they're not. So yeah, it looked like they got what they wanted, and they went straight back to the liquidity. Now they can begin to fill again. Yeah, so these little things where you get this 500 trade, I think it was, yeah, 563 from what I can see here. I'm not sure if I've really talked that much about, you know, some of these turns in ES, in ETH, but you know, I've said before that what I like to see is the volume dots. I know I don't have them on screen at the moment. I've got the delta dots for people, but what I like to see is very large trades into good zones or areas. So I'm always intrigued by the size of those trades, because they often accompany some, you know, reversals, whether they're short term or not. You know, and you know, if you'd been there and right on the trigger there, you know, it is possible. You know, you've got a little spring down below. You take it with a tiny stop, and you go straight back up to that liquidity. It's a very hard business to be there. That's, you know, it's pure scalping if that's what you wanted to do. Anyway, 8:43. Oh. Art P, hello, first time. Well, yeah, welcome. I may go back to doing what I was doing, which was a little expectancy calculator. So at the moment, yeah, we might leave this for 5 minutes. So we've got this bank of liquidity in ES. You've got some advertised targets below that they're flushing. On the value side, we really are smack bang in a value zone from yesterday afternoon in RTH, and so yeah, it's really. It's not exploring, it's just it's trading within that larger value area at this stage. So yeah, I'm not seeing anything to suggest we're going to have a huge move in either direction before that 9:30. You know, somebody else may just suddenly come in and they'll kick that move off at any second, but at the moment it's not apparent. So let's go back to the expectancy calculator. Okay. Right, let's go back more towards the basics on this one. So, right, okay. And what we are essentially doing is starting off with the modelling. So you've got an expectancy per trade of 0, profit factor of 0. And you know, if you did want to focus on win rate, you know what was a realistic win rate for a 1R type win versus 1R type loss is 70-30. That, when people say that they do have those win rates, it is believable. You know, I've achieved that myself. That is not out of the equation. It is not necessarily the way you're going to make the most money, but it is worth putting into your calculator to model to see how much money you might make, and also in that case put in some commissions and round trade commission. Yeah, so it's giving you an average of 92 per trade and a profit factor of 36.8, which is great. The problem with this is that, again, you're going to be focused on win rate. You know, it's all about that win rate. So that if you do have this outlier, we've got 70, let's just say we have 2 outliers, right? And our outliers, we've just let them slip, okay? Well, let's take our minus 8R because it's a simple scenario that we did not, we did not honor our stops, okay? And you can see that profit factor drops massively, as does the expectancy. So yeah, my only point on this one, I mean, maybe those two numbers aren't the best way of representing this and illustrating that point, but the idea is to see that this drops massively if you do have outlier stops. In other words, if you don't stick to your minus 1R thing. And the other thing to bear in mind is that I've modeled this, as I've always said, on a dollar risk per trade. So I'm not doing it on a 2 points per trade or a 3 points per trade. I'm talking about the total dollars risked, which is the number of points times the contracts, giving you that 250 each time, or 300 or 1,000, whatever number you want to plug in. That's just totally arbitrary, okay? But what that does show you is that if you start letting those stops run beyond 1R, this model is essentially, I won't use the word invalidated, but materially detrimented. You know, what you thought was there for your living is absolutely killed. So that's just something to bear in mind. Okay. Okay. Let us continue with this. Right. So let's make it this one. One thing that I saw a few years ago was I saw FT71, Futures Trader 71, do something like this, but in a very, very structured fashion. So he always had 3 contracts, and he'd always do something at 1 contract and 2 contracts and 3 contracts. Like he'd move to break even after the second target was filled, and then you know, he'd trail the third one, etc. You know, it was lovely and structured, but the reason why I haven't done that, and I've made a much more basic calculator, is that especially if you trade NQ in ETH, the market is more dynamic than that. So that you know, you can have the best intentions that you'll always, you know, follow that plan, but the market really will tell you what it wants to do. And so what the modeling, what it does to help me is it guides me so that you can go with the market and that you can understand what trailing your stop and not moving your stop to break even does for you. Yeah, I mean, the issue there, if you move your stop to break even, you will find again that that an awful lot of your 100% will be in this 0 to 1 range, 0 to 1 multiple, and very rarely will you get to the 2, 3, 4, 5s and 6s. So I'm saying that, you know, for example, the let's draw the, you know, one of those trades that we like in here. So bear with me. So we've got a swing, and you've got a bank of liquidity. Draw it as a river of liquidity up there, and then you have a second swing high. It takes out the first one, you get in this sort of zone, or you get in just a little bit later, and then the market plunges. Those do happen a lot. I'm exaggerating, but because your stop is essentially very tight, and in NQ we're talking about 5, 6, 7, 8 points, you can easily get to that 3R plus, and again that's my 3R plus 5R very quickly. Okay. So what I want to do is to show you, if you instead keep your 1R stops and you keep them all in play. Oops, daisy. There we go. So if you honour this, right, and you accept that an awful lot of the time on average you're just going to get that 1R, right, and you try your best to stay out of these two, the 0s and the 5s, or basically it's not going to be this perfect, but you're saying that most of your trades will not be in this 0.1, 0.2, etc. range. And you let a few of these go. So I'm saying you let 10% of them go, and that you have 5% here, and you have, say, 5% here. And that is perfectly feasible, with the ETH, where you've got fairly tight stops and you can let them run, and you have statistics on what those reversals are like. That kind of modelling, I've got to check the time again, 51, is quite feasible. Again, you've got to model your trades and put them, put average of this, or do a more complex Excel spreadsheet so you get this analysis into your trades, but you basically view it in a way that's simple enough to see it. And accept that the numbers that you get there and there, all of these numbers, these two numbers here may not be huge, and you don't focus ever on this one, this number here. You don't focus on that, and if your win rate is 50%, you say fine. Provided you do that, and then you take your trades and you take your setups, and you're going to get multiple opportunities if you're trading two markets in ETH. You can trade them in RTH as well. I trade them in RTH when I get the opportunity, and that's most days. You'll find that these numbers add up over course, so that the 100 trades can become 200 trades, or your risk per trade. If you shove in a completely different number, for example, the amount of money that you're making. If you look at this column here, and we can always highlight this one. Let's highlight this one. It's grey, but it's probably more important than some of the other numbers, and that's with a realistic commission. I'd say that was quite realistic, and you can see that if you're risking a decent amount per trade. Again, I'm not going to make any recommendations, but it should be a sensible percentage of your total capital. But I was just putting in 500 to show you that can quickly grow, especially and if you keep taking those repetitions and you keep accepting every single one of these trades, this 50% loss, and people say to you, oh, you've only got a 50% win rate. The truth is, you could be making a heck of a lot more money than somebody with an 85 or 90% win rate. And at the end of the day, when you write your trading plan and you write down why you're trading, it's really about this. It's about that grey number there. It's not about this green number here. This green number is the flashy number that you can preach to people about, but it's the grey number that's going to pay the bills. But anyway, that was just me suggesting to people that you get into the nitty-gritty of the casino mathematics and see what plays out with the types of trades that you want to take, rather than overly obsess too much with your win rate or the absolute intricacies of every tiddly bit of order flow, right? So now we're actually breaking up through this liquidity. That's interesting. We're back over the scene of the crime. So the scene of the crime is now irrelevant. We've gone through it twice. Yeah, sorry, I finished that little rant. And I've got a question in YouTube, so I'm going to answer it because it relates directly to what I was just talking about. By the way, they've got this liquidity there, so it's likely they're going to keep eating up towards it at the moment. It's it stayed in place. They're all there. That's indicative that they will eventually get there, or may likely eventually get there. The question is from. Sorry, I just knocked the microphone. The question is from AC. Does volatility factor in when you determine what R factor you want to aim for? Yeah, no, I mean, I've got volatility baked in. So what I'm saying is that I have got some code in C++ in Sierra. It's not rocket science code. It took me quite a while to write it all because it's got a lot of lines, but there's no rocket science about it. It just calculates the number of contracts that I will put on this trade based on the stop size, right? And my stop size is something that I've drawn onto the charts. So I've got a very, very basic retracement tool. It's the one that's built in Sierra. I'm sure it's the same in any other platform, whether you use TradingView, Ninja, or whatever. You can customize those drawing tools to identify your minus 1R, your plus 0.5R, your plus 1R, etc. You can use that. So instead of using them for some Fibonacci stuff, and I won't comment on Fibonacci because I'm not going to say anything nice about it, so it's better I don't comment on it. But it's a great tool. If you don't use it for Fibonacci and you use it for things like working out your R's, you can use that to say your stop tick, because you've just drawn it is say 15 ticks, and that will affect 15 ticks or in ES or whatever, 30 ticks or something in NQ. The wider it is, the fewer contracts you have. So yes, it does take into account that volatility, because that code will put on the number of contracts times the stop size that gives that dollar value. So if it was $250, it won't let me take more contracts times the stop size plus the commission than the 250, if you get me. So it'll add up those two numbers together and give me the closest number of contracts up to the 250. And that's the way I've got it. It means that I'm not always taking that 250 risk or whatever it is on the day that I'm taking it. 250, again, I keep saying, is a completely arbitrary number, so please don't get fixated on that one. It will never let me take over whatever the number is, but it will try and get me as close as it can to that number in round contracts. Because you can't trade fractional contracts. I mean, you can trade micros, but you can't trade fractional micros, and you can't trade fractional full-size ESs or full-size NQs. I hope that answers that question. Yeah, it does. Great. So yeah, we're still eating towards this liquidity up above at 4407. And yeah, there's another question. I think Balan's going to ask a question in the Discord channel. What time are we at? 8:57. Yeah, I wasn't, by the way, with that Excel spreadsheet. It's a lot of the ideas that I try and present in this channel in this hour. It's ideas for you to explore, and the point is that if you put the work in, you'll get an awful lot more out of doing that work or doing that exercise yourself than buying some indicator from somebody who says it does X, Y, and Z. A little bit of time, for example, learning how to code and do something similar to the indicator that you're interested in, you'll often learn, you may learn that what you thought was a magical indicator turns out to be complete nonsense after you have gone through the nitty-gritty of the type of coding involved and realised that is not how the market works, for example. Balan's still writing a question. I will leave that alone. But yeah, so it looks like they are trying to get to this 4407. And that, if we look at that auction, we're just auctioning up towards the top end of value again in ETH. And the bullish, whatever happened from this news release, it looks like it's essentially over now. And if we do get down there, down to the bottom end of this heat map in RTH, it's not this particular part of the auction. It's a new cycle of action that comes in a little bit later, probably after the 9:30 gong. Thanks, Bally. Thank you for that. So it looks like we're going to. For the fact that they actually intersected, if we zoom right in and see whether they did intersect, looks like they did on that one. Trying to see whether they did. Yeah, they did on the second one. Yeah, so they have been interacting. So they are using these to fill themselves. So you do wonder, whether if they're trying to fill at all these levels, whether they're going to have a nice push down in due course. But it looks like they're trying to fill as many contracts as they can at the moment. And NQ is, yeah, that's 2. It's now formed a nice little balance zone. So looking across, yeah. If I drew that trend line again, this is something that I point out on these tiny little microstructures, exploring down, exploring down. When it breaks those, you will often get this supply-demand type trade setup. It has an expiration down, or it bounces at the end, but basically it has a trend line in place, breaks it clearly, it comes back down, retests. You can often get us out there. We can do a flowchart sometime, going through all the steps involved in assessing whether that would fulfill that, but that's often a very good example of a supply-demand type setup. With a very good risk to reward. If you were taking that one and you managed to get in there, even if you're being conservative on your stop, I don't think you'd have your stop much lower than that point there. So you're talking about a stop of about 23.50, and you get in at about 29.50 maybe. So you've got a 6-point stop, and you'd already be at 2R. Yeah, you'd definitely be at 2R. So I'm just saying some of those do turn into some very, very nice multiple R type trades. Right, I've gone past the 9 o'clock, so yeah, thank you very much for watching. I hope some of it was of value, and yeah, interesting action at the ETH news release, and it looks like really they're just setting up themselves for RTH at the moment. So yeah, good luck today, and have a very good rest of the week, and I'll stop this